Hey guys, it is Julie here with TipRanks. In today's video, we're taking a look at two stocks that analysts think have the potential for some big growth. So let's get into it. Alright guys, welcome back. Thank you all so much for being here. Like I said, today we're looking at a couple stocks that come in with some big upside potential from analysts. We're going to take a quick look at these companies, what it is that they do, and what these analysts are predicting for their stock's future. Just before we get into all of that, this is your friendly reminder that if you enjoyed today's video, make sure you hit that thumbs up button and that you're subscribed to the channel so you can stay up to date with all of our latest videos. Alright, let's jump right into these two growth stocks. First on our list today is a company called ARBE Robotics. Their stock trades under the ticker ARBE and is currently priced at $10.41 per share. ARBE Robotics is a tech company that deals within a specific niche in the automotive industry. The company just became public about 1 month ago on October 7th. They did this with a reverse merger with SPAC company Industrial Tech Acquisition. The SPAC merger raised the company $118 million in new money. ARBE Robotics has developed an industry-leading radar system. They're driving a radar revolution, paving the way for an autonomous future. Founded in 2015, the 80-member team already has 26 partnerships with global Tier 1s and auto industrial OEMs. They're projecting $312 million in revenue by the end of 2025. ARBE's radar system is up to 100 times more sensitive than existing automotive radars. Their Phoenix radar can differentiate between true threats on the road and false alarms and can recognize vulnerable road users such as bicycles, motorcycles, and pedestrians. The system has 300-meter range, 100-degree azimuth, and 30-degree elevation capabilities. ARBE is the only automotive HD 4D imaging radar solution and is functional in various weather and lighting conditions with that long range and wide field of view. Just this month in November already, they've announced 2 deals with Chinese automobile companies that'll give them an entry into the Chinese automobile market. Considering China is the largest market for new automobile sales, this is a pretty big deal. Weifu, a major supplier to China's car makers, will use ARBE's chipset and technology to manufacture imaging radars for Chinese car with full production plan for the end of next year. They also announced that their imaging radar will be installed in cars manufactured by BAIC Group, one of China's automakers. One analyst weighing in on the ARBE robotics stock is 5-star analyst Gary Mobley from Wells Fargo. He writes that we believe ARBE will emerge as a market share leader in the emerging 4-dimension radar market for automotive and industrial applications. ARBE is a pure play on new generations of radar sensing technologies being added to motor vehicle designs to allow for L2 plus ADAS and AV driving capability. Gary is one of 3 analysts that currently have a rating on the ARBE stock, and it does come in as a strong buy based on unanimous buy ratings. Their average price target comes in at $14.33 per share for an upside potential of 37%. We have 2 ratings with a 15% upside and Gary on the high end with a $19 price target, which would be growth of over 82%. The second company on our list today is EQT. EQT trades under the ticker EQT and is currently priced at $20.56 per share. The EQT Corporation is the largest producer of natural gas in the United States. They produce about 6% of the total U.S. production, and if EQT were a country, they would be the 12th largest producer in the world. They operate in the east in the vast gas basins of the Appalachian region, with operations in the states of Pennsylvania, West Virginia, and Ohio. They have over 1 million acres of land holdings with access to the Marcellus and Utica shale formations, where the company has more than 19 trillion cubic feet of proven natural gas reserves. The company has a robust free cash flow profile with over $10 billion of free cash flow generation through 2026. The company just shared their third quarter earnings report on October 27th. They showed nearly $1.8 billion at the top line, the highest in more than 2 years, and earnings per share of 12 cents, which was up dramatically from the 15-cent loss in the year-ago quarter. The company revised its 2021 free cash flow guidance upwards by $200 million. Weighing in on the EQT stock is analyst Arun Jayaram from JP Morgan. He writes, "We think the bear narrative has largely run its course, with the risk-reward decidedly skewed to the upside given a number of catalysts that we expect to play out over the next 6 months. Management plans to unveil its cash return framework prior to year-end, which we view as an important catalyst to force the valuation higher. Another catalyst is the potential upgrade of the company's debt rating to IG in 2022, which would not only reduce their cost of capital, but improve liquidity by removing margin postings and LOC requirements. The EQT stock does currently have 11 analyst ratings and comes in as a moderate buy based on 8 buy ratings and 3 holds. The average price target comes in at $28.82 per share, which would be an upside potential of 39%. On the low end, we do have a hold rating with an upside of 11.5%. Arun has a bit more of a bullish outlook with a price target of $31 for upside of 50%, but he isn't the highest. We have a couple at $35, which would be growth potential just shy of 70%. So there we have 2 stocks that analysts think have some pretty big growth potential in the future. Of course, I always love hearing from you guys, so make sure to let me know your thoughts on these 2 stocks in the comments down below. Were they already on your radar, and what do you think of their future growth potential? Please keep in mind these videos are never a suggestion to buy or sell any specific stock and are just meant for information and entertainment purposes. Please make sure you're always doing your own research and due diligence before making any investment decision. If you made it to the end of today's video, make sure you hit that thumbs up button and that you're subscribed to the channel as well. Thank you guys so much for watching. I hope you have a fantastic day, and I'll see you back here next time.